Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1703 AN. Today's date is October 30th, 2018, and the title of the episode is Watch How the Central Bank Tries to Hit Back to Regain the Narrative. Let's get into the economic collapse financial news. Now, over the many couple of weeks, we know that Trump has been building the narrative, pushing the idea that the central bank, the Fed, is going to be responsible for this economic disaster. And it's just not an idea. It's actually what's going to happen. And the IMF, they've been fighting back. They're trying to create a narrative, to shape something. So they created documents, and they're going back in time, and they're trying to show that when you raise the interest rates, it doesn't collapse the economy. It's actually what the economic policies are, and we'll get into that in just a minute. But I wanted to talk about how the entire economic system is deteriorating, and it's accelerating, and it's moving very, very fast. And we're starting to see things really fall apart right now. Yes, you might not see it on the corporate media, but if you start to look at this information and you start to see what is happening, you go back in time, you can see how the economy is barely staying afloat right now. Yes, they can manipulate the statistical numbers up to a certain point. I mean, you can show the stock market is continually moving up, unemployment moving down, GDP incredible, but if everyone is out of a job and corporations are laying off and retail stores are closing left and right and retail sales are down the tubes and the housing market collapses, those numbers at a certain point will be meaningless. Think back to 2006, 7, 8, when they said that entire time that the subprime securities were AAA. They kept them at AAA when everything was falling apart. Think about that for a second. It was fake. It was an illusion. The same thing's happening right now. Now, Wolf Richter puts together a very nice picture of the housing bubble, and he tracks the Case-Shiller homes, and this is 20 cities around the country, and shows how the housing bubble is much larger than the 2008 bubble. If we look right now at the Case-Shiller U.S. Home Price Index, we see that the first housing bubble was around 185 or so. Then it dropped all the way down to about 135. Now it is above 225. So it's an 11.5% increase from the peak of July 2006. That was housing bubble number one. When we look at what has been going on here, we can see that growth now is slowing. Everything is starting to change. And if we go through city by city, we can see that everything is changing. If we look at Seattle right now, we can see the first housing bubble, we are 32% higher than the bubble back in 2007, 2008, 2009. If we go back and look at Boston, the housing bubble back then, well, right now we're 18.7% higher than what it was back in the recession highs. If we look at Denver, we're 55% higher than the first housing bubble. If we look at Dallas, we are 48% higher than the housing bubble back in 08, 09. If we look at Atlanta, we are 8% higher. Now, Atlanta took a huge fall during the recession. I mean, they went down 37%. So the housing bubble in Atlanta was really pumped up around 45%. If we look at Portland, we are 26% higher than that. San Francisco, 40% higher. I mean, you're starting to get the picture here. What we're seeing is that the central bank, hedge funds, investment companies, Wall Street, they've pumped these bubbles up to heights that we've never seen before. And but when these housing bubbles pop, because they always do, we've seen it back in 2008, we've seen it before this, and when it comes down hard. And remember, this time, this wasn't a people's-driven bubble. It was a central bank that pumped this bubble up alone. And of course, yes, they used easy money. They had hedge funds, investment companies, banks buying up homes, trying to rent them if they can, keep them off the market, just hold on to them. Because a shortage in housing makes the bubbles increase, because people think, whoa, a lot of people are looking for homes. There's no homes out there. Wow, I can't find anything. And people start raising their prices because there's, supply and demand. So what we're seeing here is that these bubbles have hit all-time new highs. Around the globe, like in the Eurozone, we're starting to see things are rapidly falling apart. The Euro area GDP only increased by 0.2% in the third quarter, half the pace of the previous 3 months and half the 0.4% consensus forecast. It was the slowest growth rate since 2014. Now, Germany and Italy both missed. They grounded to a halt, and we're starting to see there's huge amount of problems in Italy right now. Everything is going to start to fall apart very, very quickly once all this goes. And we can see that the ECB, well, if GDP and the statistical numbers are not doing what they want to do, they're not going to end tightening. They're going to delay tightening, which tells you they're stuck. The Fed right now, they're raising interest rates. The ECB, not doing anything. That tells you something. That tells you there's a plan in action right now in the U.S. Now, the EU, they're trying to figure out a way to keep their Iranian nuclear deal. And they're trying to come up with an Iran oil trade payment vehicle. And this is a huge problem for them because there's no EU country that wants to be the anchor. They're afraid of what the United States might do if they are the anchor country. So once again, Iran is in trouble here. And we can see that eventually what's going to happen, they're going to be talking to the United States to talk about a new deal. And all these countries, well, they're going to have to renegotiate. Now, we know that Trump has been attacking the central bank, contradicting the central bank, pointing out specifically that as you raise the interest rates, it's going to hurt the economy. And what's very interesting is the central bank is out there, and they're doing whatever they possibly can to counter, to fight back against what Trump is doing. Because they know when this system falls apart, they know they're going to be blamed. Now, the bank of all banks, the Bank of International Settlement, they are referring to a paper that is explaining why raising the interest rates does not hurt the economy. Now, this is a little piece from that paper. The substantial increase in the federal funds rate from mid-2004, reinforced by higher policy rates elsewhere, did not prevent further increases in risk-taking in the financial markets during this period. Turner wrote in a 2017 paper titled, "Did Central Banks Cause the Last Financial Crisis? Will They Cause the Next?" Now, what they're trying to do here is they're trying to explain away why higher interest rates will not have an effect on the economy. Now, remember, Paul Volcker, he was being interviewed with the New York Times, and he actually brought down the economy with raising the interest rates. But what they're saying is it's different this time. Actually, it's much, much worse, and yes, it is different. And we've never seen interest rates this low. And we know when the interest rates hit a certain point, that's when the economy starts to fall apart. And what the central bank likes to do is they like to hit that point, and then they bring the interest rates down very, very quickly, so it looks like nothing really happened. And for a period of time, within maybe a year, it seems like nothing is happening, but the avalanche has already started. You can't see it on the top of the hill. It looks like a little bit of dust, and it starts rolling down the hill. It's getting bigger and bigger, but by the time it hits the bottom, no one realizes that at the top, it was the interest rates that actually caused it. All they see is the destruction, and the central banks say, hey, it's been a year now. It had nothing to do with the interest rates. That's actually what happens. It takes a little bit of time before the interest rates kick in. And once they hit the tipping point, that's when they start reducing the rates very, very quickly. I'm not talking about, let's bring it down 0.25% this quarter. I mean, they're dropping at full percentage rate, each quarter, maybe 2 times a quarter. That's how fast they were bringing them down, so no one would know what was really happening. And they're trying to fight back now. They're trying to produce papers and show that raising the interest rates, this doesn't do anything. It doesn't affect the economy. And if you notice, it's coming from the Bank of International Settlement. You're going to see the IMF out there trying to fight back because they know in the end, they are going to be blamed. Their plan is out the window. They had a plan. It was set. They were going to move the entire system someplace else. There was going to be this incredible event where they can explain away why all of this is happening. Maybe almost like in the 70s. When we were coming off the gold standard, they were saying, oh, there were gold speculators and everything like this, and this is why we're seeing this. But behind the scenes, what they were really doing is they were switching us to the petrodollar system, but they really didn't want anyone to know about that back then. Today, it's a little bit harder because now we have the internet. Now we have people talking to each other. Now we have people realizing what was done in the past, and we could see what's happening in the future. Sounds like Q, future proves past. But anyhow, we can see they're trying to fight back right now. They're trying to use whatever they have to say Trump is wrong. But at this point, Trump is going to control the narrative. And I'm not just saying Trump himself. I'm saying all those people that are working with him. He's going to control the narrative, and there's no way out of this for the central bank. They're going to try everything. I mean, they're going to put out papers. They're going to put out stories in the mainstream media. They're going to do whatever they possibly can because they need this to go away. Because once they are blamed, it's going to be like a domino effect. Well, if the Fed is responsible, then the IMF must be responsible. If the IMF is responsible, then the biz must be responsible. They're all connected. Maybe we don't need this. And if Russia, China, they all chime in at the same time, and all these countries say we don't need the private Western central bank system. We're going to manage it ourselves, the people of each one of these countries, the governments of these countries, where we're going to create the currency with no interest attached. The central bank is finished. And I believe this is the ultimate plan. Because if one country tries to do it, the central bank can either bring, the countries to war or try to stop it. If multiple countries are on the same page, this is very difficult for the central bank to handle. And this is the plan. This is the push. And this is the only way to get rid of this system the way we see it today and get rid of the private Western central bank system. But one thing is for sure, and I don't want to forget about this, is that to get there, we have to go through a transition. There's no way around this. I mean, you're coming off one system, going on to another. I believe they're trying to make it as easy as possible. This is why you see the tariffs, the tax, relief and things like that. They're going to try to make it as easy as possible. If it was the central banks and the deep state, they wanted a disaster. They wanted it to look bad. This, they're going to try to, roll it over to the new system and keep the transition very short. But a lot of people are going to get hurt. A lot of people are not going to be prepared for this. A lot of people are going to lose a lot of their wealth. There's just no way around it. And you need to be prepared for this. You need to be ready for this. And you need to have things in place. I would personally have gold and silver. I would have cash on hand because when the system starts to come down, you're going to want to use that cash first. I would have cryptocurrencies. I would have bartering type of items like toilet paper, emergency supplies, water, food, and things like that. Because as we're transitioning, if you look at countries around the world like Russia, when they were transitioning out of the Soviet system, when we look at Venezuela, Argentina, going back in time, Weimar, Germany, all these different areas, you can see there was a certain period of time where it was very hard to get supplies. You saw inflation. And we're going to see the same thing here. We're coming off a system that is 40 plus years old, that is debt-ridden, that cannot be supported, moving on to a new system. It's going to be bumpy, so get prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.